Es ist an. Wunderbar. Willkommen zurück. Welcome back. Hope everybody enjoyed the coffee break. It's been a wonderful day so far. I'm amazed how busy it is. So it's time for a panel. It's time to educate more. It's time to understand more what is going on in the world. And we've got a fun discussion lined up. I called it The Future of Gold in the Global Monetary System. That topic deserves an 8-hour breakout session. Definitely. Because it's not an easy thing to do, to discuss, and have an opinion on. And we're going to do this in English, by the way. Florian Kössler is joining me here on stage. Introduce yourself, because I looked up your bio. I have a hard time summarizing it.
Where should we start? I'm a mechanical engineer, but I used to be a professional poker player. I did that for the early part of my life, became very good at it, became even a world champion in online poker. And then I started looking into the monetary system. I started back in 2008 during the last big financial crisis. And I kept studying, kept coming across the Austrian School of Economics, fell down the gold rabbit hole recently, fell down, or over the past years, fell down the Bitcoin rabbit hole. I published, together with my partner, a book about Bitcoin, which became a bestseller in Germany. And we run a financial asset management firm and do a lot of consulting, and that's who I am.
Who's your partner?
Mark Friedrich. We also have a huge YouTube channel. Maybe some of you are aware of it. Mostly in German, so if you haven't checked it out, definitely look up Mark Friedrich on YouTube. It's pretty big as well.
Absolutely. No, really, very, very timely topics that you discuss as well. And you recently launched a second channel where you're at least half the face.
Yes, where we do more like in-depth analysis of financial markets, a lot of technical analysis.
Yeah. I like your weekly review video, by the way. So
next one is on Sunday.
There you go.
Did it yesterday evening.
Oh, fantastic. No, we're going to talk gold and global monetary system. A lot has been happening in the last few weeks. I said it in my keynote this morning. Gold has moved about 50% since last May. An absolutely insane move. Maybe we'll start putting some context around that first. Just to pick your initial thoughts. Like, why did gold actually move?
Yeah, actually, I mean, most of you probably as well, but I've been waiting basically my whole adult life for this moment, because I just told you, I started looking into all of that in 2008, and if you remember back then, everybody thought, okay, well, they are printing so much money, the system is going to fail, we're going to see hyperinflation, and so on and so on, and now, 17 years later, still no hyperinflation, still the US dollar is the main currency. But I think it's finally happening. And Scott Bessent, the US Treasury Secretary, said it last year. We are about to witness a global reordering of the financial system. And I think it's just started. It's probably going to take 5 to 10 years, maybe even 15 years. But we are now in the first inning, and gold is going to play a central role in all of it. And I think especially the recent move, and such a strong move in such a short period of time, tells you that a lot of people in the world, especially people with money, are aware of that and are preparing for a new monetary system.
Absolutely. Before we continue, I've got a question for the audience here real quick, just to see where everybody's head is at. Like when you look at gold, do you see it as an inflation hedge, as a strategic reserve, or something else? Just by show of hands. For who is it an inflation hedge? All right. Who's using it as a strategic reserve? Okay. Nobody's hedging inflation that much then, eh? Interesting. Anything else? Like
I just looked at the data recently, and I looked at the correlation with M2 money supply. And actually, gold has only a 60% correlation with M2 money supply. So it's not really an inflation hedge. Obviously, it is an inflation hedge, but it's also a hedge against geopolitical uncertainty. And there are other assets maybe who are better short-term.
We're not going to talk about those. This is a different conference.
I'm going to do it. We have to.
We have to touch on that. Like somebody's just said it outside. I think it was Vukasin actually.
Yeah.
Who says like it's like siblings fighting. I kind of like that. It makes sense.
Yeah,
it's
definitely.
Normal for siblings to fight.
For me, obviously, you should own both. It doesn't make sense for me that the Bitcoin community is so anti-gold and the gold community is so skeptical against Bitcoin. I think both are forms of sound money, and I think you should own both. And one of them is going to win in the long run. And if you own both, you're definitely a winner at least financially.
Oh, you see actually one winner out of the battle. You just said something very dangerous. This is recorded. There's a camera over there.
It depends on the time frame. But if you think about it in a time frame of 50 to 100 years, probably one is going to win. I mean, gold won over the past couple of centuries against silver, against every other commodity. So, I mean, everybody who was betting on silver over the past 500 years lost against all the gold bugs. And I think in the end of the day, it doesn't make sense to have different store of values. One is going to be the best, and it's either gold or Bitcoin. But for the next 15 to 20 years, I think they're both going to coexist.
Absolutely. Let's come back to the discussion topic here, global monetary system. Lots been going on. Central banks have obviously been buying a lot of gold.
Yes.
The question is, what triggered that? Like, why now? Like, as you said, like we've all been waiting for stuff to happen or something to happen, and now it's just the last 2-3 years it happened. What changed?
Probably Russia and the seizing of all the Russian asset was the trigger point. I think it doesn't even have to be this specific case, but it was a final trigger where a lot of the world realized, okay, we definitely shouldn't put all our earnings in US treasuries or in US dollar. And I think that was, the final thing that kicked that off. And now you also got a US government who is actively trying to change the monetary system and even telling it openly. I mean, the US Treasury Secretary is probably one of the most influential people on the planet. He says it openly, and he's even a gold bug. And he says, hey, we're going to change the system, and I want to be part of it. And gold plays an important role. And so I think Russia was the initial start, and now the new US administration is...
Elaborate on that. Like, what are they trying to achieve here? Because I don't see the game plan per se. Of course, we can start reading tea leaves here, and I think we have them on our YouTube channel. You do some guesswork as well. But what do you think the plan is, and how are they going to get there?
Well, the first thing is to get the trade balance in order, and that's a big task. And I don't even know if they're going to be successful with it. But the US has the biggest trade deficit in peacetime ever, and on the other side, the biggest debt problem ever, and rates are pretty high, so they have to do something. And that's, I think, especially in Germany, I read a lot of the commentary on it. Most people don't understand it, what Trump is doing or why is he doing it. It's mostly about the US will have a default if they don't change anything about their deficit. So that's the first part. And the second part is that the US dollar is actually now a problem for the US. Obviously, you have a lot of benefits if you got the world reserve currency, but you also have a lot of problems. And one of the problems is that your currency is overvalued all of the time because the rest of the world is using your currency. And I think that's the other part of the plan, to devalue the dollar over the long run, and probably maybe even use gold as a new world reserve currency. But that might take time, and I'm not even sure if Trump managed to do it all within 4 years. So that's just a very short period of time. I think it's going to take 10 to 15 years.
We got to talk about devaluing the dollar.
Yeah.
Like we've seen it. The Dixie, for example, the dollar versus 7 other currencies dipped to about 98. Recently, it's recovered a little bit, but I think the U.S. was surprised by that. While they took it as like, yes, okay, we want that in the long run. It happened too short term.
I think that was a lot of bad communication, especially by guys like Navarro and Lutnick. I think they didn't do a great job, and Trump as well. I think Bessent managed it the best, and that's why he is negotiating with China now. And they were surprised by it, and actually I think we're going to see a dollar rally into 2026. Sentiment now is so bad for the dollar. Everyone is bearish on the US, but I think the US is still the strongest economy in the world, has still some of the best companies in the world. I think we're going to see a dollar rally into 2026. It may be even a huge dollar rally, something like in the 1980s. And then afterwards, sometime in 2026, 2027, we might have some form of Plaza Accord like in the 80s, and then we actually see the big devaluation of the dollar. But I think first a rally, and that's going to conflict a lot of pain on the world. And I think right now nobody is prepared for it because everyone is in mind that, okay, the dollar is useless, it's over. And it's usually when you have this extreme sentiment, it doesn't matter if it's gold, the dollar, or any other asset, usually the other thing happens.
No, absolutely. You touched on the Blazar Accord. I was going to go as far as back to Bretton Woods.
Yeah.
And
but for Bretton Woods, I think we're gonna see during our lifetime, we're gonna see something like Bretton Woods. But we need some big crisis before that, and I think that.
I was going to say, because you said, like, well, the tariff part is the first part of doing their homework.
Yeah.
Like trying to balance a budget. We got to be careful here. But what other homework do they have to do? Like, it's a big task, listed task they have to do. But I can see it happening. Okay, we're getting our balance into order because the U.S. wants to be a part of the world monetary system or global monetary system moving forward. They're not willing to give that up.
Definitely, and they will be. They have, at least officially, the largest gold reserves. They now have the largest Bitcoin reserves. They still have the largest military, so they're still in the driving seat. I think it's pretty ridiculous if anybody is really claiming that U.S. is not the strongest nation on earth right now. I don't see any contender for it, and I don't see it changing anytime soon.
This is almost like conspirational or Verschwörungstheoretisch. Terrible word to say in English. But if China were to come out, or the BRICS were to come out with a new currency, and it was at least partially gold-backed, wouldn't that take the butter off the gold's bread? The US dollar's bread?
I'm going to say something controversial, but I think that's a fairy tale. I don't see any BRICS currency, and I don't see also the BRICS nations are so divided beneath themselves. Just look at the recent conflicts between India and Pakistan. China is backing the other side. So basically, the biggest two BRICS nations are close to fighting each other. Russia, meanwhile, is backing India, so it's a whole mess. And I don't think that there will be a BRICS currency backed by gold. We might see, I think that's also a little bit Verschwörungstheorie, some form. If you go back to Bretton Woods, what was the other proposal? There was a Bancor, some form of global currency. Maybe they're trying to pull something off like that they introduce a currency, a global currency, maybe issued by the IMF or some other institution, and that's going to be backed by gold. And that has been like a theory for a long time, one world, one currency. And maybe we're going down this road and think that's way more likely than some form of BRICS.
I just had to think of Tom Cruise movie, IMF, The Impossible Mission Force. It kind of seems fitting. Yeah, right.
Definitely. I mean, it's going to be not a smooth path. It's going to be a lot of chaos, I think, in the coming 5 to 10 years. But when it's all said and done, I'm nearly 100% certain that we have a different monetary system, and gold will going to play a big role in it, and the gold price is going to be a lot higher than today.
One thing I've noticed is that we're being conditioned, or maybe it's just technological trends. You can interpret what you want in it. That I'm paying with my watch now for coffee.
Yeah.
Right. During COVID, nobody took cash anymore, and a lot of shops still don't take cash. We use our phones, credit cards to pay for things. Things are going digital, meaning payments are going digital. How do you see that influencing the global monetary system?
I don't know if you probably want to go down the CBDC path.
We have to.
And I'm obviously a huge proponent of that. I think that's some form of, surveillance state, and I don't want to live in that world. And also Scott Bessent, I have to mention him again. He recently said he's also against it. He's not for it. So it's mostly a European thing. The Chinese also working on it. But at the end of the day, even a digital currency, it's still a fiat currency. So it doesn't change anything. Even if you introduce some form of CBDC, you still have to use gold if you want to really change the monetary system, especially after the coming years where I expect at least high inflation and maybe hyperinflation, but that's really hard to tell. But if the current monetary system fails, you can't just introduce a new form of fiat currency. You need to come up with something else. And maybe they try to introduce a digital currency backed by gold. That's possible, but you can't just introduce another form of fiat.
Yeah, I was going to say, it seems like when you introduce a new currency that's backed by gold, anybody with 2 brain cells would run into that currency and just buy it.
Yeah.
Because it's actually backed by something.
Yeah.
Right now, we all know the US dollar, even the euro, no fiat currency is backed by anything.
Yes.
Right? Isn't that just something that automatically happens? And I've asked that a year, 2 years ago when we talked about the unit, like the potential BRICS currency. wouldn't that just be immediate competition? Like, wouldn't that just even...
Definitely.
Let me rephrase that real quick.
Every other currency is probably 10-0 against that one.
Yeah, because we've had a couple countries that weren't, what do you call them, economically savvy.
Yep.
Like, I think it was Zimbabwe
Yep.
that had a gold-backed currency
Yep.
just recently, and nobody took that up.
Yep.
You need credibility for that as well. And you said, you talked about the largest gold reserves.
Yep.
I think there's an argument to be had that it's not the US anymore.
Probably. I think you can argue that the official numbers, as usual, in China are not true, and China probably owns a lot more gold than officially reported. Do they own more than the US? It's hard to tell, but they are definitely buying a lot of gold. They're producing a lot of gold in China. It's prohibited to bring any gold outside the country. So you always have to ask you, why are they doing it?
Yeah.
And I think that's also the common denominator between the US, China, and Russia. They all own gold. Even Europe, even Germany. Hey, something positive about
the largest gold holder in the
yes. So we're gonna have some say into all of that as well. And Trump recently posted, I think 2 or 3 weeks ago, who got the gold makes the rules. And I think that's good for Germany. And so all the interests are aligned. The Russian, the Chinese, the Indian, the US, they all own gold. The Germans, the Europeans. And so that's why it makes sense to go down that path.
Let's speculate a little bit. Recently, about 2,000 tons of gold moved from the LBMA vaults back into the US. Why?
That's a very good question. I think it doesn't have anything to do with tariffs because I think it's even impossible to put any tariffs on gold because gold is official tender in a few states in the US. So something else is going on there. One explanation is obviously that US want to bring home their gold because they know what's coming. Another one is that the Treasury is actually buying gold because US Treasury has the possibility to buy gold without any other political institutions actually agreeing to it. So maybe Scott Bessent, he's a gold bug, is doing something in the background. There's also something interesting happening. Bessent, or the US Treasury, recently issued a lot of short-term bills. So they raised a lot of funds, and suddenly a lot of gold is flowing into the US. So maybe something is going on there. But I think at this point, it's hard to tell what's really going on. But I think you should pay attention to it. And it's just, it's just another a piece in this big puzzle that gold is really getting back into the monetary system.
Absolutely. Florian, let's zoom in a little bit. Like we've had a recent move to gold at $3,500.
Yeah.
It's retreated a bit. Let's say we're at $3,200. Describe the recent gold move to us. Like what's been happening? Of course, it sounds very short-term focused based on the discussion we've been having so far. But let's make sense of the price action a little bit. How much Henrik Zieberg, who everybody loves obviously online, said gold was massively overextended. I say it was a little overhyped personally.
I mean, Henrik has been saying that for years, I guess. I mean, he's been calling for,
1,200,
I think, 1,200
gold,
for the last 2 to 3 years. Wouldn't put too much into that. But I think, so what happened? The bigger the base, the higher in space. Gold probably consolidated for 10 years, from 2011 to 2020. And then we got the first big move during COVID. Then we did another consolidation. And then really the big move happened. I also agree it's a little bit stretched, but not too much. I actually believe we're going to see some consolidation over the summer, maybe even till September, October. See a little correction, maybe down to 2,800, maybe even a bit lower. Then everybody going to get bearish again, and I think then the next big rally is going to start in 2026 or maybe even at the end of the year. And I think it's going to take us to 4,000 in gold, and after that, I would expect a larger correction and consolidation before we go probably even higher in 2028, 9. And I think long-term targets over the next 5 to 10 years are definitely 10,000 and above. But short term, I think we're going to see some consolidation, some pullback, and I think that's going to be a great buying opportunity later this year.
You already answered my very last question for our conversation here, Florian. But we got to talk about triggers of potential financial reset. As you said, like something needs to happen. I just spoke with Francis Hunt outside. We had a long interview, and of course he's pointing towards the debt, global debt, and not just U.S. About 400 trillion globally. The U.S. of course heavily burdened as well. France, 120%. Italy, I think 120% as well. Germany, we're doing actually okay, 63%.
But we're starting the printing press now, so
it's getting worse.
Catch up.
You know, let's talk tomorrow.
Yeah.
But what are potential triggers? Is the question to a potential global financial reset or monetary reset?
Yeah, definitely debt. I think that's the number one problem, especially with rising rates. Now it's not sustainable. Obviously, you can kick down the road a couple of years, but it's only going to get worse. So we have to do some form of debt jubilee. How that's going to look, that's up to everyone's imagination. But I believe one way to do it, I think Luke Roman is very vocal about that, is actually if we have a few years of really high inflation, some form of yield curve control through the central bank, and that actually would bring down the debt to GDP ratio.
We've tried that before.
Like
Germany's tried that before.
And I also believe there's a risk that it actually goes south and that we see some form of runaway inflation during this scenario. But then again, then the debt is gone as well. So I think one way or the other, over the next 10 years, we have to get rid of the debt. But it's not going to be pretty. That's the problem. Because debt is the liability of one side, but the asset of the other side. And especially if you look at the pension system, those are the guys who own a lot of treasuries, who own a lot of bonds, and those would obviously devalue a lot. They're actually already devaluing a lot. If you compare bonds to gold, we're actually already in a hyperinflation.
We got to talk bonds.
A lot of tough calls to make for politicians over the next couple of years.
100%. We got to talk about the bond market.
Yep.
The 10-year yield, 4.5%, roughly. It seems like it's capped there, though, I have to admit. Looking at the chart, it seems like there's a ceiling a bit. You talked yield curve control. That's why that question popped into my head. What do you make of the bond market? How much is the bond market holding the U.S. hostage right now?
Very much. I think it's the biggest problem of Scott Bessent or the U.S. in general. And 4.5% is the ceiling, but if it goes above it, it's going to fly. And then it's going to get ugly. And I think then the Fed has to step in. Once we get to 5% or even above, the Fed has to do something, and then we are back to money printing, and then we are back to step one. Well, inflation is going to come back, and gold is probably going to go up. But if yields keep going up, that's probably going to be a huge problem for basically all assets, because we then have some form of financial crisis, and then we see at least a small crash, I think, in gold, in stocks, in Bitcoin, in basically everything. But for the moment, we are still sub 4.5, so let's see where this goes. But I think it's one of the most important markets right now.
You touched on short-term funding and short-term bills being issued here. One thing, I spoke with Andy Schachman earlier this week, and he pointed me towards SOMA. Short-term, I forgot the acronym, but it's a funding vehicle from the Fed that can actually buy treasuries, right? And they bought over $22 billion worth of treasuries. A, is that normal? And B, like, how is that? What does that tell you about the strength of the bond market or the bond market?
It tells me that yield curve control is going to be the end game. It's just the question is how long they're going to try to keep up the story that the bond market is in good shape. And I think sometime this year, maybe next year, they have to flip the script, and we're going to see some form of yield curve control in the US and probably in Europe as well. And that's maybe some way out of this debt problem if we kept the rates at 2% and have inflation at 8 to 10%. Then we definitely get down the debt to GDP ratio. But as you mentioned earlier, maybe we get a crisis then in the currency. But all roads lead back to gold, lead back to Bitcoin, to basically sound money. We are now in the end game. It might take 5 years, it might take 10 years, but the final has started now, and that's the main takeaway for me, and also for me personal as an investor. It's pretty easy, I think, to allocate capital during these times. And then I think there's a famous saying: there are times where you don't wanna own any gold, and there are times where you basically only wanna own gold. And we are now in the latter. So,
well, maybe a last question here, Florian, before we ask a couple of questions. There's questions from the audience, but do you see the U.S. can actually grow its way out of the debt situation, like debt versus GDP? We all know debt is growing.
No country on earth can do it anymore.
It.
That ship has sailed a long time ago. I just recently did a chart where I compared US debt and GDP growth, and basically you need $5 to $6 for $1 of GDP growth. So I think there's no way out of it. Maybe with artificial intelligence, robotics, there's hope, but even then, I think the debt problem is way too big right now, and so we have to get down debt. And it happened several times over the past couple of thousand years, so it's nothing new, nothing that didn't happen before. In ancient history, they basically did it every 50 years, some form of debt jubilee and restart, and I think it's going to happen again.
It's time to push that button. We have about a minute for some questions. Simon.
Well, obviously, it went up, and it might go a bit higher over the year. But I think, as I mentioned before, I think we're going to see a huge dollar rally into 2026. And probably the euro is going to lose the $1 level during this time. So I think that's going to be the last summer to do some cheap holidays in the US. And during this dollar crisis, I think that's where it's going to get really interesting, because if you see such a large dollar rally into 2026, we have basically a global financial crisis. But from Trump's perspective, or from the US perspective, you have then all the cards in the hand, because everybody is going to come to you and say, please, Donald, get the dollar down. And nothing better for him. So I think that's going to happen.
Fantastic. One last question.
Can the euro survive the dollar?
Definitely not. I think it was one of your questions is if the euro can be a new world reserve currency, and I think Macron recently mentioned that. And you probably heard of the story that there was this Verschwörungstheory that Macron was hiding some cocaine during the meeting with
the tissue affair.
Yeah. I don't know about that, but before he mentioned, if you believe that the euro is going to take over as a world reserve currency, you definitely have to be on drugs.
I think the French want to see that.
Maybe,
but they want to place their nukes everywhere as well, so they have some.
But it's never going to happen. It doesn't make any sense. I don't think it's even a good target or a good aim to have for the Europeans. So I think we need a neutral world reserve currency, and I think the euro won't live longer than the US dollar.
Fantastic. I can't believe that 30 minutes are up. Florian, where can our audience follow you?
Mostly on YouTube and on X. That's where I post.
Student of Cycles.
Stuff. Yes, Student of Cycles, because that's everything that happens now happened before in history. And if you study history, you basically can look in the future.
Oh, there you go. Fantastic. Great words. Everybody else, thank you so much. And Christian.